So this is a live trade that I'm in. It is a very fast pair. So I'll just start sharing screen. So this is Gbpnzd. It's the fastest pair in the market. So you do have to be very careful with this, but you can see this big curve. These outer extensions usually act like elastic bands and ping price back in. We just work to the pattern, to the major levels. This is a rolling line of support and resistance, measuring 62 previous candles. This is a mathematically based line of resistance acting like a ceiling. That's called quarter theory. So you can see the break and the retest, and then off the inner extension, I've got in the trade here, and it's just running down. So there, it's just running down there because what usually happens is that price wants to come back to a major level. So you can see that level here. There's that mathematically based line of support and resistance. So you can see that price stalled there for nearly half an hour there, and then tested that rolling line of support and resistance. This orange line has headed on up there and is now, having done that big move. Now it is a fast pair, as I say, so you can get, just looking at the time, because you do get moves back towards the hour. So towards the hour, you can see it went back up there. But you can see that wick, the candles tell you the story. So it wicked off the quarter theory. So that meant price tried to push up, but actually it closed here below the pitchfork. So that's a very good entry point. And that's the broker's fee for getting in the trade will always start you with a slight minus. And then price, as you can see, flows like a river. So it moved, that's off my price at 406. It's moved 10 pips. So at this point, if I show you by putting cloning there, so once I've got down, usually I like 15 pips because on this fast pair, then the stop loss at the moment is up at this level. Really, you should have that covered as well. But well, no, sorry, the inner line, because you wouldn't be taking a trade in this section here because you could get caught like that. See how price just carried on through there for, it stayed in that level for for an hour. So once price has come down sort of towards this zone, then I'll be thinking of moving that to round about here. Then you're protecting yourself from giving money back from the market, and that's 3 pips behind this rolling line of the ceiling here. And then as that orange line carries on down, then I'll be tracking that down and pushing it down, pushing my profit down till I'm 1 pip in stop profit. Or I can wait for it to hit that. I can be more aggressive because of the time of year and the fact it's a very volatile pair, and I could put once it's hit that level, I could put my stop profit in at that 1 pip. But because it's such a fast pair, you can find that it comes back on you quite rapidly. So it's a judgment call, but the point is, as soon as you get into a trade, then you just have to make sure that you know exactly how you're going to, what we call, run your trade. And this is a fast pair, so I've come on to do a little video for you to show you how I run a live trade. And 325, 406, 325 to 406. So I'm about 5 pips or so in profit. Let's have a look there. That's 10 pips. So it's just reversed back a little bit. So that's 10 pips to the 3, that'd be 10 pips. 306 is 10 pips. So it's coming back now to test this area. Doesn't always come right back up, and I just want that nice orange line just pushing down on a nice angle to show, because that will, if your price is below that, then you will be selling, and if it's above, you'll be buying. So I'm quite comfortable with this trade at the moment. I'm going to stay on for a few minutes because it's such a fast pair. just to show you, that's the 15-minute quarter coming up, so that's good. That'll be a strong candle down. And then something else you can do is you can just look at your pivots here. There we are. Highs and lows. So lower highs means price is coming down, and lower lows. So you can see it dropping down nicely there. And then, sorry about the very colorful screen, but I'll stop sharing when it hits that mark. So you can see here, red band is 15-minute band. This is price on the 1 minute. So I've got a nice band in the red. Doesn't mean so it wouldn't flick back to the green, but that shows me that on the 15-minute time frame, price is moving down. So now I have a decision coming up as it hits the 15 pips. Where am I going to put my stop loss? So am I going to go for that 1 pip at this time of year? I can see that there. I'll probably, for the moment, just put it. I might put it there just till it runs down a bit more. 2.5, so 3 would be 1.92490. I think I'm probably going to move it there, just behind 3 pips behind the 62. Just give that a chance to run down a bit more. I'm just going to stop sharing screen because my alarm is going to go off any minute. Just let it push down a little bit more. There we are. There's the alarm going off. So now this is the point. You have to make your mind up. Make your mind up on what you're going to do with your trade once you're in it. So my stop loss is now going to be 2490. So that's much better. I'll just take a screenshot of my live account to show you later. We're not allowed for compliance to show money or talk percentages. We do work to percentages daily. So I'm now in at this, my stop at 490. That's where my stop profit is now. So I've saved myself, should price reverse on me, 6.6 pips. So I'm up 1% on the risk at the moment because I'm up 15 pips to only 10 pips. So 5 pips is 1%. So we risk normally, our average is 10 pips, which is 2%, to make 20 pips, which is 4%. So that's how we run it. And now you can see, if you look at this here, 4.2, that's already moved. I could start moving that down a bit to, sorry, the dog's whining, 1.92478 would be 3 pips above. And that's very good that the orange line is meeting the pitchfork. So if that just comes on through, even better for us, because this is a very fast pair. So you can find it wants to come up, you know, it's like a river, come up before it goes down again. But also this time of year, winter, very good for practicing if you're new, because the markets do tend to be a little bit slower. So you can just go for your, you know, I could have closed it out there really at this time of year, but I've only put a smallish lot size on this, so we'll see what happens. So I've got 2 levels protecting me between taking me out on price up here. So normally price will want to just touch this, possibly. It might not even make it up that far. Oops. Let me just, I think I might have moved something by mistake. Yeah, I just want the pink arrow. So price likes to touch. You can see that 62 is just leveled off a bit, but I'm on the 1 minute. We do all our trading on the 1 minute, which means we can, it allows us to work with very small stop losses. And also we very rarely get stuck in consolidation. We're in trades in and out quickly. and yet we can make quite a lot of pips. So we'll just see. Now that was quite a strong engulfing candle, but as they call it, but price, as you can see, this is a very fast pair, big candles up and down even at this time of year. I'm just going to stay on for a minute. We'll just see what happens. And it's just wicked off that 62. So that's very good. And keep an eye on your clock over here where you are. This is the new candle. So although you had 2 candles up, no need to panic, because if I magnify it for you, you can see that it exactly hit. I think there's a tiny wick off it on that buy candle, and it's just tested the 62 and it's coming back down. So I'll stay on the bigger chart for you, the magnified chart, just so you can see the candles, because the candles will always tell you the story. And that's a very good sign. You know, you don't need to panic when you see it doing that. You don't need to panic because you've got your stop loss here. You know, we're working to percentages and numbers of trades. You've got your quarter theory there, and I know I'm that many pips behind, and now it's pushed down. It's wicked off. There is a tiny wick there, which means that was the highest it achieved, and it couldn't quite close, and then it just wicked off and touched the 62. So coming down nicely. So I'm aiming for that 20 pips. It is this time of year. If we look back at previous, always look left to see what's happening right. So we can see this is the edge of the scan. And normally price will want to ping back into the scan. We're working off this here. It did hit the median, which means we can take buys and sells once it's got the momentum on the trade. That was the D point, and you can see price is held. And you can see that these are the previous levels of support and resistance down at 1.91000. So I wouldn't stay in this trade till that long, because obviously you can see it will wave back and forth. But then if you come back down, you see that there, and also you can see that stalling out at that level, 1.91500. Okay, and there on the 15-minute. There's that line of stall out there for 4:30 to quite a while, three and a quarter hours before it took off up to there. See how on the longer time frame, 15-minute, rejected perfectly, came to that major level, couldn't quite make it down there, wicked off there, stalled along there, up to the outer level, and now decided it's had enough and it's coming back down. This is the 5-minute. So that's good for us, because on the 5-minute it is below our pitchfork. There's all that stall out there for 45, 42 for 20 minutes. And then back to the 1-minute, which is where we sit on our default. And here you can see it's playing out very nicely. So this should give you a lot of confidence, but you don't want to be greedy. You want to go for your percentages. And now that it is there, I might say to myself, that's just hit that line. So 3 pips there is 1.92470, 92470. And you could move that to there. 450, because you're above 470. So, or you can move it to your previous high. So previous high there is quite a good point, or there. So because of this time of year and the market, I think I'm going to move my stop profit now to 1.2924. 1.92450. So if it does suddenly whack me out, got even, even better situation. So I'll just stop share again and modify my stop loss 1.92450 and share screen again and just show you, if I showed you on here what it looked like. Stop level 1.92 from 1.92450 to 556. So I've saved myself 10 pips. So I'm only 5 pips loss to the broker should something very nasty happen to me. But you can see it always, price will always flow like a river unless it's red flag news. What do we mean by red flag news? If we come back here, I don't know if there is any on this. I think there was on the 9th of November on the GBP. So if I come to the hourly to show you that, the 9th of November, this was the governor of the bank. That's the 10th. It's the one we were looking at on one of our, because we have live sessions where we all 6th, 7th, we all trade together. I think it was somewhere around about here, but these big spikes up, that moved 100 pips. There was the governor of the Bank of England. It's called red flag news. So monetary policy, banks meeting, oil meetings, European Union meetings, US elections, these things will cause the market to spike. So unless you get these big spikes, then it's moving in patterns and waves. It is not random. And we use these indicators and this assistance to help us. So you can see it's wicked off that level again. So actually, I wasn't concentrating there because I was showing you other things. I probably might think about taking my profit, shortly, because I can see that, trying to grab that pink arrow, because I can see it's wicked off there. It's wicked off there. Now, it doesn't necessarily mean anything. You can see a doji candle there, indecision 50-50, long green buy, sell candle, then a buy, then it did the same thing again. As I said, it's a very fast pair. But what is in our favor is this big break and retest, the rejections off, the orange line, the ceiling is below the pitchfork, and you've got the quarter theory there as well. So I'm going to stay on a little bit longer. If we can just get it down again to that level, I think I'm probably out the trade. But you can see, and you've got wicks off there, so hopefully it'll make another push down for us. Sorry, that's my phone going. Just delete that. You don't want to hear me speak French. Come on then. So fast pairs are volatile. You have to be careful taking the setups. Equally, they're nice because you're not having to sit around. You know, you can make a decent number of pips where a pip can be worth 10 cents, $1 or $10 and multiples thereof. We only ever risk 1, 2 or 3% of our account. So we keep safe because at 2%, sorry, coffee's gone cold. Just put it back in the jug. I'll heat that up later. So you'd have to lose 50 trades in a row in order to blow your account. So that's what makes it such a good strategy for us. So I'll just stay in this a little bit longer while we follow it through. And if we come back to our pivots, price will often stall out slightly like this. It's nothing necessarily to worry about. Pivots, there we are. Still forming, that's a very good sign. It's formed a lower high, a lower low there. You've still got the lower high there. That's a very good sign. And then we don't use this for entries or running trades, but just to, there we are, it's still all red. It's still saying it's going down. As I say, this is the fastest pair in the market, so you will get these big swings, these retraces. So you know, and we just measure them from there. So in fact, if you hadn't got in here, you could have gone in, it would have given you another entry there, because in effect what it's saying is sell me all that stall out, the wick off there, the wick off the quarter theory and the pitchfork, and then it's saying here sell again. Okay, so I'm not sure how long this video is, but I'm pretty confident I'll get the 20 pips, and it might run down to this major level, but I probably won't stay on the in the trade or on this that long. I'm just going to go for, because I can see those two stall outs, so this is to show you how I run a trade. I've got a comparatively low lot size on this one because it's such a volatile pair. So I've decided I'm going to come out when it hits this again, or see what happens on the candles and see if I can get it to that 20 pips. And then I'd have quite a good ratio, 20 pips for 15 pip stop loss. So that's 3% to gain 4%. Normally we're trying for 10 pips. But we like to cover major levels. I haven't quite got that major level, but I've got two there. So I could have actually had it at 10 pips really, because I can see some old pitchforks behind there. So I could have actually had my stop loss probably at that, but it's hard to tell, you know, when you're, well, actually that's a bit tight because you'd wanted a few pips above. You'd want it on 12. You'd want to cover that quarter theory by a couple of pips. So, but 10 to 20 would give you 2% to make 4%. So in this case, I've risked, because your stop loss is your profit regulator and your entry determines your loss. Meaning if you'd got in lower down, you know, misjudged it, timing, then that's why we measure it like that. So that's now running down nicely. Now, as this is such a fast pair, there's no reason why, if you remember, I marked those other major levels, 91500, which was right down here. But, you know, am I going to stay in the trade that long? Probably not, because of its volatility. I'd take another entry rather than do that. And that entry, although you've got 20 pips there, and you've got 25 there, so you have to judge your entry because you want these major levels to protect you from being taken out of the trade. But the other thing I'd like to measure is just what is the gap between there and there, 65 pips. So you could take, and I'm probably not going to do this time, but time of day and that kind of thing, you can take what we call a stack-in trade here. If that runs down nicely, you can keep that one open and then run a stack-in trade. What do we mean by that? So if that green box, if your profit's coming down to here, then you can have virtually a completely risk-free trade by setting your stop loss there and seeing if you can get that 20 pips or 5, another 1%, 10, another 2%, etc., down to that major level. And that's how we run a stack-in. But as I say, I'm not going to stay in this trade that long, even if it does that, because you see it's stalling out again here. So I'm just going to let it have a feeling, because of that lower low it formed, that it wants to come down further. It is on a good run down. So, but I just want to see if I can, you see I could have come out there, couldn't I? Just looking at my the time. 35 past the hour, and there's that alarm's going to go again. That's good. So normally price will run to major levels. I'm going to get out at the 20 pips. I'll be happy with that. Don't be greedy. I've made a good percentage. Unless, of course, you got very big candles and it just suddenly started shooting down. But you're always thinking when you get into a trade, how am I going to run it? What are my major levels and what point do I, am I going to get out of the trade? And that's dependent on what other trades you've done in the day as well. So that's past the alarm now. So I'm going to take that off. I don't need it anymore. And I'll put it at the 20 pips, which is 406. So that's going to be 206. Just so you can see, you don't have to put these lines on. It's just something I like to do. I'm a sort of very visual person. Helps me remember what I'm doing. And then I'll take a screen grab of the live account to post along with this video for you. But I've got that nice orange line still coming down. So whilst your price is to the left of that on a sell, you've got no reason to come out of the trade. And also you've got your trade trend line here. So sorry to keep drawing lines for you, but if you put that on, then you can see also you've got no reason to get out of the trade while price hasn't broken the 1 minute trend line. It doesn't matter if you've got a bit of slippage, it's on the 1 minute chart, but what you want is 3 or 4 good touches, which I've got there. In fact, it probably might be better like that. So 1, 2, 3, 4, 5, 6, 7 touches. So here we are at our 20 pips. Very tempting to continue to stay in. I am going to stay in a little bit, but it is a fast pair. So I think I might come out now because that has hit the 20 pips. Where am I? 222.06. 22.06. So I'm just 1 pip off the 20. I got in at 406, so I want 206. And here's your price down here. Now it does say GBP. This is your currency strength meter. Have been buying, so that's another reason, another thing you want to keep an eye on, that it has been buying. But we'll just see if we can get it down to that 206. So it's just coming up. So we'll just let it. How many? 44. Just going to see what the next candle does, because I have got longer sell candles than buy, but it is a fast pair. Got that in my favor. I've got that in my favor. Price will want to move to major levels, so I've got that in my favor. I've got the time of the hour in my favor. So I'm just going to see what happens on this next candle. It's just moved up a bit, as you can see. Good, it's just wicked. It's given us a big wick, which means it's trying to push up, but it can't. So the next candle will be a sell candle, a green one, I would think. And it's just opened as a buy candle, but not too worried about that. So 223, there we are. It's just dropped now. So at the end of this, I'm out the trade, because at the end of this 1 minute candle, 206, and I've got 39 seconds, 206, because 35 seconds, because I wanted the 20 pips, and it could retrace on me a bit, 2206. I'm going to come out the trade, so I'm going to stop sharing, go there. Just bear with me a minute. 0.4, 19.2. Just see if it'll push to the 20 pips. 19.3. I'm going to press the button to close it any minute, any second. And I'm closing. Right, I'm out the trade. So share screen again. And there it is. So I just got out at that, just under the 20 pips there. I just got out there. So that's how you run a trade. Because remember, over the year, however many trades you're taking, just to be able to squeeze out that extra 5 pips, that 1%, allow for your broker's spread and commission, that adds up to another 100% on your account over the year. Now, this price may well carry on down, but I don't want to be greedy. I've done that 20 pips. I've run this trade. I'm now going to stop sharing and I'm going to post this video for you. And I hope that was useful to you. And I'll put it on my YouTube channel. Please subscribe, please comment, like and share, and please message me if you'd like any more information to be added to our prospect group for learning about this strategy and our other highly successful strategies with our indicators exclusive to our team. And you can do Bitcoin trading at weekends.